up budget coverage that we are doing for you on Business Today Television. Manish Sonthalia, Director and CIO, MK Investment Managers, is now joining in. Manish, warm welcome. Good morning to you. Good to have you with us on Business Today Television. 1.5 hours remaining now before we see the final print on the budget and the speech starts. What's your one big expectation from this speech this time around?
I think alleviate the problems of the middle class in terms of consumer spending. I mean, that is very much the need of the hour. And, the consumption of the middle class has really fallen off the cliff. It's the largest that the economy got during the COVID. And, that is one area that should get a whole lot of impetus and which could actually, drive other things like your private capex, etc. Today, consumption itself is very weak, and that is also not driving the private capex. The government is doing its bit as far as the capital expenditure on the government side is concerned. Even that is falling short of expectation. So I think the task is tough before the FM. On the one hand, you will have the FRBM, sticking to 4.5% fiscal deficit. Last year, capital expenditure on government side will not be met. I hope that number 11.11 lakh crores, gets whittled down to at least 10 lakh crores, if not 11 lakh crores. And on top of that, you build in something like a 20% sort of an increase in the capital expenditure. I think these two things will, sort out most of the problems as far as the markets are.
Namaste Manish, a very warm welcome. Shail this side. It's always a pleasure to listen to your well thought of views. At this point of time, in the PMS schemes that you have, what is the level of cash that you've raised, and are you looking to deploy it fairly soon, or will this be, a painful 2025 for bulls?
I mean, it's common knowledge that unless and until something drastic happens in this budget, FY26 is likely to be a year of consolidation. And, there's no way that one should expect the returns that came in fiscal 25, or not even fiscal 25, fiscal 24. Post the pandemic, the sharp run up, because the moot point is that, for stock markets to do well, your corporate earnings have to do well. And corporate earnings today are not in a great shape. And that is something which will keep the lid on stock prices on the upside. So cash levels in a AIS scheme which I run is close to 10% as of now.
Okay.
And PMS, basically there will be hardly any cash. It's all.
Manish, now when ultra HNIs approach you to manage their money, have their expectations improved? Have they come to some kind of sense that the rally that we have seen in the past 3 years or so was unsustainable, and perhaps that, one must be a little cautious ahead? Has that realization sunk in?
No, as far as the retail HNI customer is concerned, I think over the years they have matured quite a bit. It's no longer playing the herd mentality, which was there 20 years back. They are quite literate in terms of how the financial markets are going to move and what is happening in the global context, so on and so forth. But one thing is for sure is that the last 4-5 years of one-way non-stop rally in the markets have elevated expectations as far as returns from stocks are concerned. I think our job as fund managers is to set the expectations right and not keep elevated expectations of something like doubling every 2 years in terms of returns, etc., because that is quite far-fetched from the long-term returns standpoint which India has offered. Unless and until something very drastic happens, path-breaking reforms, etc., then it's a different trajectory. But I think as we see things as of now, I think even if we get a 15% on the Nifty 50 for FY26, it should be a very good return to look at when it comes to fiscal 26.
Per down expectations, 15% would be a good one to see on FY26 in terms of returns on the Nifty. We also welcome Mr. Devin Choksi, MD of DR Choksi Finserv Private Limited, now joining in. Warm welcome to you, Devin, sir, and thank you so much for taking the time out. Well, the budget day is yet again here. Do you think this budget has in it to do something for the markets that could not only help it retest the previous highs, but also probably go beyond it? Or do you think it's too much to ask from this budget?
Sakshi. Well, I don't think that I think it is too much to expect. I think economy is absolutely, I think, on a firm wicket. I think which is a good sign. And what government has to basically take care of is few things. One, they lacked in implementation of whatever the measures that they announced in previous budget, particularly on the infrastructure spending side. If they end up putting up their acts together and start implementing whatever they have allocated, I believe that I think that would be the reason for kickstarting the economy and economic growth. I wouldn't be surprised if they do the allocation of around 12 to 12.5 lakh crores for infrastructure as against 11.10 lakh crore which they had allocated in July 24 budget. And their efforts will be to implement that infrastructure program. That is what I believe will happen. Second most important aspect, they are tightly working on the roadmap given for fiscal deficit, which is fundamentally important. If they must bring down the inflation, if they must bring down the interest rates, I think they will have to work on the talk that they made on the fiscal deficit side, which is 4.5% target for this financial year. In my viewpoint, I think that roadmap would be available. The third point where I believe that they are holding significantly high level of opportunity is in the area of already announced programs in renewables, in semiconductors, in cloud computing, particularly data center related activities, and among all, I think the entire AI space that we are talking about. So in each of these areas, they would probably end up attracting significantly large sum of money. That is what my take is. Should that happen, I guess I think this budget will cheer the market.
The pictures that you see are Finance Minister Nirmala Sitharaman briefing her cabinet colleagues, including President Murmu, on the outline that the budget document will have, which is right there in front of her. And from here, she will head to the new parliament to unveil the budget. I think those are the images that you are seeing. She's moving from the Rashtrapati Bhavan towards the parliament. But the markets are off to a flyer. This is the fifth day of gains. Actually, yes, this is the fifth day of gains. And the index itself is up 55 points, 23,563. Decent gains coming in the small cap space, the broader markets as well. And it's the PSU defense basket which is the top performer. Look at how Massgaon Dock is up 3.5%. You have a strong gain coming into Garden Reach Shipbuilders, which is up about 3.5%. Again, HAL, BDL, BEML, all of them showing very smart gains. Devin bhai, is this space, the defense sector, still a hunting ground for you, or are valuations still to correct? Devin bhai, the question was for you. The defense sector, have the valuations corrected substantially, or is there still room for fall? I think there's an issue with the connection with Devin bhai. Manish ji, this question again comes back to you. The defense space, how do you see it at current levels? Have the prices corrected substantially, or is there more to go?
Shailendra ji, railways and defense are flavors during budget times, and today is no exception. But having said that, I think valuations still are quite low. You really don't have too much of leeway as far as the spending side of things are concerned. FRBM of 4.5% fiscal deficit and 6.3% real GDP growth can't build in more than 10% revenue growth. Your capital expenditure at best could be 3.3% of your GDP, and that would include all the spends, right? And where is the leeway to increase spending on defense, etc., substantially? So, having said that, yes, there has been a pullback from the recent lows of the defense companies, but I would believe that valuation still up to 90.
All right, and let's also welcome another guest. We have with us in our studios a very special guest joining in, Punita Kumar Sinha, Managing Partner, Pacific Paradigm is joining in. Warm welcome to you, Punita, and thank you so much for joining in on this special broadcast as well. Of course, all the conversation around what this budget could have, could it really set the ball rolling for the economy and drive sentiments higher on the D Street as well? That's the basic ask. But I want to first ask you, are you looking at more indications from Trump's commentary, or are you looking from Finance Minister's commentary this time around, Punita?
Well, that's actually a very important question, because I think what the Finance Minister can do is really focus on our domestic economy. But the markets are not just working on the domestic economy. There are a lot of the foreign investors in particular are impacted by what happens globally, and some of our companies also impacted by what happens globally. So President Trump's comments are just as important, because they control the external economy, and the finance minister can really control the internal economy.
Namaste Punita ji, and a very warm welcome to you. I'm a little nervous asking this question, nevertheless I will. Who did you vote for in the US?
A vote is a private matter.
Okay, I have my answer. Okay, now let's focus on our markets. We've had this unrelenting selling by your foreign friends who were Indian friends as well. They are taking away money from Indian shows back to the US. US 10-year yield, you know better than most of us put together. How do you see this trend? Will this continue? So far, $80 billion have been withdrawn in the last 15 months or so. Where do you stand on this equation?
Well, I mean, frankly, it wasn't that they were favoring one regime over another. It is simply valuation disparity. And the Indian stock market had gotten a little frothy, particularly in the mid and small cap space. And therefore, everybody knew that the valuations were not being supported by the underlying growth, and it was only being supported by flows. So, and the domestic flows predominantly. And the domestic investors don't have alternatives the way foreign investors have. The foreign investors can invest in China, they can invest in other emerging markets, they can invest in the US. There's just like a much bigger pool that to choose from. The opportunity set is far larger. So when you see valuations in India that are unsustainable because of what the growth and the earnings numbers were turning negative, earnings estimates were negative. So that's the reason people moved away, the foreign investors who could move away. And when if the market corrects sufficiently and the valuations become attractive enough and the growth story is supported, and maybe today's budget may support some of that, then the money will start flowing back in. But right now, what is important is that even our domestic investors are getting more cautious. And if you look at the SIP data, that is also showing that it has slowed down considerably. So a lot of investors are out of the market, especially the speculators, and are sitting on the sidelines waiting for some good news.
Absolutely. Let's get also Devin sir back into the conversation. I think he can hear us now. Devin sir, I think we're asking what exactly can we expect from the budget, what can push the markets higher, but let's also focus on what could be a dampener. What is it that we should not be getting in this budget document? What should the finance minister refrain from doing? What would that be?
Well, I think majority of the focus is basically on managing the fiscal deficits. And I'm talking about combined fiscal deficit between the state and the center. If any further freebies are given, which would lead to unmanageable fiscal deficit, that would be a disappointment, and that can possibly significantly affect, I think, the inflow of money from the foreign sources as well. So I will believe that I think the government and the finance minister probably will not tinker around with such kind of approach, wherein probably they would expand the deficit. On the contrary, I think they would try and bring down the deficit to 4.5% as we were talking about. Second most important aspect is it is expected that you raise money by way of selling some of the capital investments, particularly the PSU stocks. So far, I think this has disappointed the market. It has not happened. For some reason, I think if they have a roadmap ahead, in the sense, I think the market will probably accept this as a positive move as well. And that has a potential to attract a lot of new investment in the country, because that raise of money would definitely mean that the fiscal deficit would very come down from what it is currently. So I would rather look forward to both the possibilities, more the possibilities at this point of time.
Uh, your view, Punita, on this very touchy topic. What should the finance minister not do from 11 a.m. onwards?
You're talking specifically with respect to capital gains tax, I suppose. See, my view is slightly different. Having invested in other countries as well as India and even the US, the retail investors there are taxed higher on long term capital gains, particularly in the US. And also, the short term capital gains tax is higher than what it is in India. So, while the markets always hate increase in capital gains taxes, you also have to look at the state of our economy and the fiscal situation and the wealth creation that has happened in the financial, equity investors' hand. So there is a rural sector that's in distress, but then there is this whole equity market investor that has had significant wealth creation. So if the tax, I mean, you have to increase taxes somewhere. You can't keep penalizing the salaried employee. So if you increase the taxes here, it is actually better for the economy. May not be good for the stock market in the short term, but it will be a good source of revenues, and the market will absorb it eventually. Because if our earnings grow and the companies do well, then the equity markets will bounce back at some point.
Do you think, Punita, then there is a case to probably relook at the STT? Are we also being overtaxed when it comes to equity as well? Should there be a case to abolish that at least?
Well, it depends on, you have to balance the whole basket and see the mix, how you want to shift the mix and what will get better revenues for the government and what will hurt the least for the retail investor. I think it's a balancing act and it can be done, and it can be rationalized to some other jurisdictions. And I think maybe the markets won't like it short term, but eventually I think they'll absorb it.
These are the views that are coming in from the parliamentary building, and that's the motorcade of Finance Minister Nirmala Sitharaman heading towards Parliament, where she will be talking about the budget document 1 hour 7 minutes from now. Let's get Manish Bhai into the conversation. Manish ji, where do you stand in this debate? Should there be a combination of STT and long-term capital gains tax still to be deployed for better tax realizations, or does one have to go?
Shailendra, I think, foreign investors have really been very, not very happy about the capital gains tax that has got introduced. In any case, if you can reduce the capital gains tax, nothing like it. The markets are going to fly, and there is going to be absolute stopping of the selling that has been relentless from the foreign investors' point of view. Even the domestic investors will like it. But the best that can happen in the current situation where there is a clamor for resources, I don't think there's any tinkering of capital gains or STT that is going to happen. The best that can be done is just leave it untouched. And, that is the best that you can expect in this sort of a scenario. And I think one aspect that should be clearly avoided, but it's very much plausible, is that the government during the COVID actually reduced corporate tax, anticipating that private capex will pick up. But there's not been too much of significant pickup in private capex. And if you read the economic survey yesterday, and has been a direct hint that at the corporate sector that you should be lifting the ante along with the government when it comes to upping the private capex. So This is one expectation. So I just hope that in order to balance the budget, there is no increase in corporate tax rate. Because if you have to stick to FRBM, if your revenue budget can't be more than 10%, your real GDP growth is at 6.3, and your capital expenditure even at 3.3% of GDP, 12 lakh crores, anticipating a 20% increase on 10 lakh crores, the number which you will see for FY25. I mean, there is, and not too much of disinvestment happening, because nothing really picks up as far as disinvestment is concerned. So I think two things will matter. One is the dividend that will be declared, that will be paid by RBI to the government, and the balance will be basically corporate tax. So these will be the two areas where there's going to be a lot of juggling that is anticipated as far as the balancing of the budget with 4.5% fiscal deficit is concerned.
Okay, I think Manish makes a very valid point when he says that the leeway that the finance minister has in terms of raising fresh revenues and giving relief to sections of the markets seems to be very less, and she has a tough balancing act to follow. Punita, the economic survey very clearly mentions that it's the private sector which now needs to pick up the baton from the government and start its capacity expansion. It hasn't done so in the last 3.5 years, despite tax cuts. Where do you stand in this argument? Do you think that corporate India has let down the economy, or is it because cheaper assets were available via the NCLT, which they could buy instead of create fresh capacity?
Well, the thing is, now I'm on board many companies on the private sector, and there it's not like the companies are avoiding investing. They're continuously looking for opportunities. Every company knows that the Indian consumer is a growth sector, and they are continuously finding ways to grow their companies and their bottom lines and their top lines. And so to the extent that they can find a rational return on any investment that will get them more profits, they will make that investment. So, for instance, in steel, I was on a steel board, and there they were looking to expand capacity rapidly. I'm on many other sectors. In the pharma, companies have so far been focused on the US generic market, but now increasingly they are also focusing on the Indian market, the Indian patient, and finding ways to reach out to them. So it's not like the companies are not coming up with proposals. It's also that it has to have a decent IRR and a return on equity for your stock market participants, for people like us who want to also hold the company's ROE and return ratios, and also be accountable. So both the boards, investors are always looking at these ratios, and therefore the companies, to some extent, if they can't find the right asset at the right valuation or the right investment case where they can grow rapidly, they shy away from it.
Okay, Punita, it's time to thank you, but I want to ask you something interesting. How long is going to be the budget speech today, and which is the word that will be spoken the most in the budget speech?
That's an interesting thing. I haven't thought that. I suppose it will be your standard. I don't see it being different than what we've seen in the past, because there is a lot to be discussed given the state of the economy. And I think what will be discussed the most, the word could be potentially wages and employment.
Okay, last time it was tax. So let's hope wages and employment. That's something that Punita is betting big on. Thank you so much, Punita, for being with us and sharing those balls of wisdom with all our viewers. Keeping our fingers crossed that we do get some goodies out of the budget speech today. Devin sir, quickly before we thank you as well, what is it that is your number one ask from the finance minister today?
Implement whatever the measures that we have already announced, implement it well. I think the government has possibly let down last year on the implementation front. And as a result of which, I think the economic growth has come down. I think if the economic growth has to come up again, then probably I think implementation of those measures are absolutely important. And I think, as I was making a point, I think these four areas, the renewables, the AI, the semiconductor, and computing, these four areas deserve to add into your PLI scheme. for further interactive investments.
Okay. Let me just take this opportunity to take the final question from Punita. I'll request the PCI to please show Finance Minister Nirmala Sitharaman. And the view is on this Madhubani sari that she is wearing, Punita. Any thoughts on the Finance Minister's choice of wardrobe this time?
Oh, I love Madhubani sarees. I have a similar type of sari that I bought in Calcutta many years ago, similar white with Madhubani. I love all these ethnic saris, and I think it's great she's promoting it. And I think there'll be many more sales hopefully coming from this.
Which sari is President wearing? What is that kind of a sari? Since you talked about your knowledge about saris more than me on the show.
So I think that's a Chanderi.
That's a Chanderi?
Yeah.
Okay, we'll find out in the fine print then. We'll find out.
And I have one more task to do. I think the better half is also watching. So I'll have to get this Madhubani from somewhere.
Yes.
Oh, it's easily available. I have exactly something similar.
With that, ladies and gentlemen, we'll again take a look at the markets. The Nifty is up 47 points. There is a sea of light green across the Lal Street. Spaces in the defense counters like Mazgaon, Cochin Shipyard, Garden Reach are in good shape. You have a strong move coming into railway counters such as RVNL, Railtel, IRCTC, IRFC. These are all pre-budget plays. Fertilizer is doing extremely well. Let's hope that the worst is behind us and that this budget document unveils something to look forward to from February 2nd onwards, in fact from 1 p.m. onwards, and this 5-day rally that we've seen now moves into a better and higher gear.
All right, viewers, it's time to take a very quick break and we'll be back with another set of panelists. And don't go anywhere. Next 1 hour is going to be a discussion on what the budget document will be. Countdown has begun. We are inching closer to the final time. 11 a.m. is when Finance Minister speaks.